Abiodun Kerikwe is the head of investment research at Afrinvest, and is live to us from the Nigerian Stock Exchange trading floor. Abiodun, good morning. Welcome to the program. Was teed these off just before we went on break about those data, economic data, recently from the PMI, from the third quarter GDP, and from the Central Bank Monetary Policy Committee. Numbers show that credit to the manufacturing sector is increasing, and the PMI has been on a consecutive trajectory, reading even stronger numbers in the recent months. So, do you think this will, one way or the other, begin to flow into the consumers and industrial goods on your trading floor?
Oh yeah, Boston. Good morning once again. So yeah, like you rightly stated, the November PMI numbers, they're out, and it showed that the manufacturing sector basically is expanding. I mean, the number touched about 59.3 points, up from about approximately 58 points in October, which shows that, yeah, the sector is expanding. But what we've seen for the 9 months, which is the third quarter earnings of most of the consumer names and the industrial names that are listed on the Nigerian Stock Exchange, we've seen that their performance for Q3 sort of wasn't very impressive, particularly for the consumer space. If you take names such as Nestle, Unilever, you will see that their top line, Nigerian breweries, international breweries, their top lines on average moderated in and around by about 5%. So revenue was down by about 5%. If you drill this down to the bottom also, you will see their earnings after tax, earnings before tax, those numbers also decline by an average of around 7% for the entire sector. Now, what this tells you is that the sector, even though the PMI number is saying the sector is expanding in terms of output, in terms of growth, but the revenues, the performance of individual companies is not really reflecting this. One, you may tell me there is a time lag because we're looking at November number, and the numbers I just sort of gave you the summary are for Q3 2019, which ended in September. So we're looking at about 2 months lag, October, then end of November. So yeah, you might say there is a bit of a lag in comparing this number. Fine, but then on the broader picture, or in the broader picture of things, yeah, you will see that the sector basically struggles with a couple of headwinds, particularly from a policy perspective. You know, we've seen that even policies that were enabled or enacted to stimulate growth in the sector really is not driving growth. So if you look at things such as import substitution policy, the foreign private investment-led industrialization, and you look at the aggression towards export expansion, all of these things really are not driving performance for most of these companies. Majorly why? Because of infrastructural issues in the economy. You know, we suffer from adequate and epileptic power supply in the country. The sector on its own has its own specific infrastructural challenges. Then not to even talk about indicators such as consumer spending power, which over the last couple of years has fallen significantly, particularly because of the crash we saw in crude oil prices. So all of these variables, if you add them together, sort of tells you that growth, even in the medium term, looking forward, will possibly still remain a little bit underwater. For the Q3, you might say the industrial sector expanded because if we use the performance of Dangote Cement as a proxy for that sector, I mean, we saw Dangote Cement revenue increase by about, top line increased nearly by about 7%. Bottom line also did close to another 10% on a year-on-year basis for the quarter, for the end of that quarter, yeah. But you could see also that the volume export out of Nigeria moderated by around 500 tons for the period, you know, which speaks to possibly the impact of the border closure, which also would affect the consumer goods and the entire sector as a whole. So looking forward, even though there are one or two positive drivers, there are key headwinds that would keep their performance a little bit tame into the near term, really.
So, yes, you're just stepping into the
Hello,
outlook for
Bossy.
the consumer. You're just talking about the outlook for consumer goods and industrial goods on the market as well. What's your playbook for these folks? If you take all the economic data that we have on these two sectors, put them together and call them manufacturing or industries, whether they're doing consumer goods or they're doing heavy, such as bags of cement, Lafarge, Wapco, and the rest of them, Flammies and all. If you put all of that together, if you take the data looking forward, do you think somehow in the new year, perhaps investors will begin to price all of this economic data into these stocks?
Okay, so for the industrial sector, yeah, the investors might price in a bit of positivity into the performance of the industrial sector. You know, majorly because in the first part of the new year, we probably did not expect a lot of we expect favorable weather. Basically, I mean, for the last quarter of 2019. Sorry, third quarter, second quarter of 2019, we know the weather wasn't really very favorable for the performance for cement sales, basically. So construction activity was down. So we're looking forward into 2020, the implementation of the 2019 budget, which already we know is in effect as it is, coupled to favorable weather in the early part of the year, will sort of be some positive driver for the industrial sector. But for the consumer goods, you know, I'm still somewhat very cautious. I mean, you know the way we say it, modestly optimistic, modestly cautious about their performance, you know, because of key issues such as spending power and some of the indicators I touched on earlier, which I don't think between now and even at the end of 2020 there's going to be any significant improvement in those indicators, you know. Even we've seen stable foreign exchange environment, which is good for them. A lot of them also has been looking into backward integration, which is good. But you know, backward integration, these things have a gestation period depending on the type, the nature of the integration. You know, it has a gestation period, and all of that has to be accounted for. So for 2020, I'm just cautiously optimistic about the sector. I would not be very bullish on the sector. Names such as Nestle, Unilever, Nigeria Breweries, what you continue to see is that their performance will not be something out of the box. They will just maintain the sort of growth trajectory they've been having over the last 1 or 2 years into the rest of 2020.
Abiodun Kerikwe from Afrinvest, Head of Investment Research. Thank you so much for talking to us around the consumer and industrial goods and the current manufacturing sector data. So let's trade the opening call on fixed income with Bankole Odusanya, who's the head of FI at UBA. Bankole, good morning. Let's wrap this quickly. What's the opening call this morning on the yield curve and the level of liquidity at the debt market?
Yeah, it's a mixed sentiment market. System is liquid generally, but this does not mean all institutions or participants in the market are liquid. So therefore, we are seeing some sales of some treasury bills in particular on the short end, such that we're seeing yields on January bills at as high as 13.8%. This is simply because it's almost year end. For profit reasons, some people will sell to take profit or to manage their portfolio going into year end. So it's just rejigging your portfolio or selling for profit. For the NTB bills, that's the one with high demand. Yields are still very low, and they range from 6 to 8%. For bond, on the short end, we see that yields have also crept into 10% levels. For FPIs and banks, they can still get treasury bills at OMO auction at as high as 13.3%. The liquidity situation, however, is causing for more demand on OMO bills, especially the longest term OMO bills are in good demand. This is simply because since the last auction of NTB that we had last week, we've not had a calendar from the DMO. So it's just OMO issuances, which have been capped at about 250 billion only. And if you add the amounts that are maturing on a weekly basis from NTB and OMO, it's about 500. So just half of that amount maturing has been taken out. So we have some funds in the system. System is liquid up to the tune of 300 billion, and then very few bills in issuance. So we expect the DMO to come out with a statement, either bringing out a calendar or simply wait until January and then issue a calendar for Q1 next year.
Great. Okay, if that is money, I'm always interested as well. 300 billion, that's a whole lot of money for me to keep two open eyes on. And I'm sure you're keeping your eyes on that money as well at UBA. Thank you so much, Head of Fixed Income Dealing, Bankole Odusanya, wrapping up the program for us this Wednesday, the 4th of December. Tomorrow is Thursday. We'll be right back on the program in just 24 hours. Have a great day, everyone.